Welcome, I'm Bradford with the Painting Pictures Guide to Personal Finance, and we're going to cover the 101 of what you need to know to file taxes for the first time. The first step to filing your taxes is to gather all the necessary documents. While there is an infinite number of combinations of various different documents that you could have, the most common ones that you're most likely to run to, especially when you're filing taxes for the first time, are going to be as follows. Now, not necessarily a set document, you do need to know exactly what your personal information is. So understand exactly what your name is on your birth certificate, as well as your address, and then most importantly is going to be your social security number, because that is how the IRS is going to attach your taxes to you as a person. Next up is going to be your bank of choice, wherever you want your money to go and be deposited into if you do receive a tax refund, and make sure you have the bank account number as well as the bank routing number. With personal information out of the way, the first document that you should expect to receive from your employer is going to be your W-2. Now, this is really important because it basically has your entire year's summary of how much money your employer paid you, as well as how much money was actually set aside for the income tax, as well as the Social Security and Medicare taxes. So you need to have all that information so that way you can make sure you're getting your taxes filed correctly. Another common document that you can expect to see is going to be a 1099. Well, there's a wide variety of different 1099s. You're going to be making sure you look for one from your bank account or credit union that you use, especially with any checking or savings accounts that you have, because that 1099 is going to document how much you earn in interest over the previous calendar year. Now, if you have really nothing in there and you're making less than $10 a year in interest, the bank might not issue you anything, but make sure you're still looking. It should be on whatever your bank that you choose. If you have some sort of document section on your online portal or on your app, that's where you're going to be looking for it. As well as from things that aren't necessarily from your bank, but if you are investing, you're going to want to make sure that you're getting your 1099 that tells you what you're earning in terms of dividends, as well as what you made in terms of capital loss or gains. If you're trading any sort of stock or mutual funds, or regardless of what type of investment you're doing, making sure you're getting all the 1099s that are applicable to you from the previous year. Now, if you own a house and you're paying a mortgage on it, you want to make sure you get your 1098 from your mortgage company. While it is going to include all of the money that you've paid towards your mortgage in the previous year, the most important part of it is going to be how much you paid in interest, because that is what is actually tax deductible and can help you lower your tax liability. And then if you're going to any sort of higher education, you're paying tuition, make sure your school is giving you a 1098-T. This is going to have a summary of all of your tuition, and it's what you need to be able to take any of the deductions that are going to come from tax deductible expenses when it comes towards schooling. Think the books that you're paying every year, as well as some credits that are available out there that'll actually go towards how much you owe in taxes. Those education credits are going to be dependent on making sure that you have a 1098-T to actually be able to apply towards the IRS. And then lastly, for the common documents is going to be if you're doing any sort of side hustle or participating in the gig economy. Think if you're driving for Uber Eats or doing some sort of DoorDash, that is going to be considered self-employment income. So make sure you have good records of all of the revenue that you've earned. If you're working for one of the larger companies, like I previously mentioned, you should be receiving a 1099 from them, indicating how much you received over the year. But if you're doing some other sort of business where you're selling directly to a consumer, you're selling online, you'll want to make sure you have good records of how much you've made in terms of revenue over the past year, as well as a detailed list of everything that you have spent money on for your business. Because all those things are going to be tax deductible. That'll decrease the amount of tax liability that you owe from whatever your side hustle is. With all your documents in hand, next step, what you need to understand is what exactly is your filing status. Making sure you have the correct filing status, whether it is single, married filing jointly, married filing separately, or head of household, has significant ramifications on making sure that you file correctly, because each of these different categories has a different standard deduction and different rules in terms of what credits and deductions that you're actually eligible for. So the first one, single, this is going to apply to most people filing taxes for the first time. Pretty straightforward. It's just you're not married to anybody, and you don't have any dependents you're responsible for. The next one is if you're married. Now, in almost all circumstances, you're going to want to be making sure that you're using married filing jointly, just because the number of circumstances where it is more beneficial to you to do married filing separately is such a very small niche category that it's not really applicable to probably 99% of the people that are out there. And then the last category is going to be head of household. So this is you're not married, but you do have some sort of dependent. Whether this means you're a single parent or you're taking care of one of your aging parents, somebody that is not living out on their own, that would place you in the head of household category. Now, it's going to have a much higher limit in terms of tax brackets as well as deductions compared to single, but it will have a slightly lower limit compared to those that are married filing jointly. Now it's time to choose what your filing method is going to be. You really have two options here with some subcategories beneath them, but the big two categories are going to be either paper filing or e-filing. Now, go with whichever one is most comfortable to you and you feel most competent in actually executing. But I will say that in basically every single situation that I've seen, you choosing e-filing is going to be more beneficial. It's more secure. The IRS is going to actually receive your tax return faster. And then if you are expecting any sort of tax refund, you're going to get that in a few weeks instead of compared to the paper filing service where it takes up to 6 months for them to actually process your return. If you are owed a refund, paper filing, you could expect to not receive that for a couple years, whereas the e-filing, like I said, is only a few weeks, depending on how busy and when you actually file during the tax season. But then within e-filing itself, which is the type that I actually recommend, you really have another 3 options within it. You can do everything yourself, and you can use the IRS's free fillable forms that are on their website. It's basically the PDF form, and you can just fill it out and submit it directly to the IRS by yourself if you feel comfortable with the type of taxes and the tax situation you're in. The next option is what most people are probably familiar with ads like TurboTax that are running all the time, and that's me using one of the various tax preparation softwares that is out there. Now, the nice thing about that is basically most of them will walk you through from start to finish everything that you need to worry about. Now, how much you pay when it comes to those different softwares has a wide range. There's some that are free, and then there's some that you can expect to spend several $100s on. And then the last form that you're gonna have an option with is if you go with a CPA. This is nice because basically you just give them all your tax documents and they handle everything for you. And then they're also liable if there's some sort of issue with your tax filing. If you do happen to be audited by the IRS, they're going to be helping you out and making sure you walk through it from start to finish. Now, everything we talked about so far is basically just preparing you to actually file your taxes. When you actually go and start filing your taxes, I have a bunch of different videos that cover specific situations, but in generality, you're going to start out with your forms, you're going to fill out your personal information, name, address, social security number, check your filing status, and then you're going to start inputting all of your income information. So that's why you want to make sure you have your W-2, your 1099s, any sort of documentation that indicates how much money you made in the previous calendar year. So you're going to get all that income listed out. And then once you have the income section done, you're going to move on towards tax credits and tax deductions. Tax deductions are going to lower your tax liability, whereas tax credits actually go towards the amount of money that you owe the IRS. So if you have two, I would rather have a tax credit rather than tax deduction. But some of the common ones that you should be looking for is making sure you're getting the standard deduction unless you have a lot of tax deductible expenses. And that way you can be using the itemized deductions or you donate a lot to charity. If you're a student, making sure you're getting those education expenses. If you have children, making sure you're getting the child tax credits. There's a lot of different things that are out there. If you recently purchased an electric vehicle or did some sort of upgrade on your house to make it more green friendly, the federal or the state level might have various credits that are applicable to you with the various green initiatives that are out there. So regardless of how you do end up choosing to file, I highly recommend just making sure you cover all the different potential deductions and credits that are out there. Even if at first glance it looks like you might not be eligible for it, just take the extra time to look and see. Because even if you go through all of it and you're not eligible for any of the ones that you covered, if there is a slight chance that you find something that initially didn't ding when you did your tax preparation, regardless of the method, you want to make sure you're just doing that so that way you can get the most money back in your pocket. Now, great job, you're almost done. The last thing you just want to make sure you do is to do a full review of your tax return. Make sure all of your math and your computations is correct. Review your income. Make sure you're getting all those credits and deductions that you're eligible for. And just make sure that everything is filled out correctly. Because the more things that you have correct, the less chance that you're going to be applicable and eligible for an audit by the IRS. Now, being audited doesn't necessarily mean you did anything wrong, but it is mean that you're going to be underneath a microscope, which nobody really wants to do because it is going to take up a lot of your time to be able to go through the process. So doing a thorough review at the end of it is what you want to do. And then, depending on which method you chose to file, it could be as simple as hitting sign and submit, and then it goes off to the IRS via the internet. Or if you're doing a paper copy, you're going to sign it with a pen at the bottom, look on the IRS Form 1040 General Instructions, and it'll tell you where you need to mail it, depending on which region of the United States that you're in. And now at this point, you're going to know whether you are owed a refund or you have to sign a payment off to the IRS. If you do owe money once you've actually done your tax return, you want to make sure you're getting that paid as quickly as possible. Because any sort of late payment or underpayment is going to accrue various penalties and fees that is going to increase the amount of money that you actually owe the IRS. So make sure you're prompt and on time with paying anything that you actually owe, even if it's just as small as a single cent. Lastly, make sure you keep full documentation of everything from your tax season and carry it with you forward. Because if you are selected for an audit, it could be actually several years in the future, and you want to make sure you have everything that's applicable to any given tax year moving forward. Just store it on your computer, get an external hard drive, whatever you need to do, make sure you have that documentation easily and readily accessible, even if you end up never needing it. And in 10 years from now, you can go back and delete it all. But for now, you want to make sure you have those documents. Now, if you have any specific questions on certain or individual IRS tax forms, 1040, 1065, various schedules that are out there, or which tax preparation software you should actually use, check out our playlist right here, which covers all of that, and that'll help almost anybody in this situation. Thanks for watching, and please remember, from your first penny to your first million, we're here to help.